Definitely one of the earnings reports I was most highly anticipating this earnings season was going to be Nvidia. Very much a fan of this company, big time. I like everything this company does, pretty much. One of my favorite tech companies out there because of everything they do. So we're going to take a look at these earnings and see what exactly is going on. Stock is down just a little bit after hours. Really nothing that noteworthy. It is obviously worth mentioning the stock has been on a tear. It's been on a tear. Year to date up over 100%. So that does need to be taken into account whenever you think about the reaction to an earnings report by investors. The stock's up massively this year. Massively. I mean, doubling is pretty big. I would know because I have a position in this, and oh yeah, worth taking it. But if we take a look at these earnings, let's see what we got. Quarter two, non-GAAP EPS of $2.18, beats by 21 cents, and a GAAP EPS of 99 cents, misses by 2 cents. So a slight miss on an EPS standpoint. From a GAAP perspective, I usually tend to focus on GAAP as opposed to non-GAAP, but not that bad actually, all things considered. Not too bad. Does hurt the PE ratio, you can't lie about that. So valuation becomes a little bit stretched on this one, as it kind of already is. But revenue of $3.87 billion, which is up 50% year over year, beat by $210 million. Nice beat on that aspect, and a 50% revenue growth is delish. It's delish, especially when you're already in the billions of dollars. I mean, we take that. We take that as a big win. Non-GAAP gross margin of 66% versus a 64.6% consensus. And operating income of $1.52 billion versus $1.36 expected. So good stuff as far as those numbers are concerned. So Nvidia's upside report includes record data center revenue. Gotta love that. Record data center revenue. I don't know what I just said there. Which included the Mellanox acquisition, and grew 54% quarter over quarter and 167% year over year in terms of data center revenue, which is a massive category for them. Obviously, gaming is the biggest thing for them, but data centers is really overtaking very rapidly. You know, it's a crazy thing. Gaming revenue of $1.65 billion. Beats the consensus of 1.41 and is up 24% quarter over quarter and 26% year over year. Pretty good stuff. Right there. Obviously, gaming, you know them for processors, graphics cards. They got it all, baby. Nvidia, you know what you're doing. But data centers have overtaken them this quarter with a $1.75 billion mark on data centers, which that's against a consensus of $1.71 billion. So good beat there. Professional visualizations of $203 million versus a consensus of $299, which is down 34% quarter over quarter and 30% year over year. Again, small segment for them, not that massive. And auto, $111 million versus a consensus of $99.3, which is down 28% quarter over quarter and 47% year over year. Auto being their integration with self-driving vehicles. So that's right, this company is involved with that, believe it or not. Adjusted gross margin, as we saw, in line with guidance, but above the consensus. And they are giving guidance for next quarter, which is good. Expecting a revenue of $4.4 billion, plus or minus 2%. And non-GAAP gross margin of 65.5%. Analysts expect 3.97 in revenue. 3.97 billion. So the expectations are a whole lot higher, actually, than, or I should say, Nvidia's expectations are a lot higher than what the analysts are expecting. So that does need to be taken into account, obviously. We do love seeing that. We also see from CEO Jensen Huang. Jensen Huang says that our new Ampere GPU architecture is sprinting out of the blocks, with the world's top cloud service providers and server makers moving quickly to offer NVIDIA accelerated computing. Mellanox grew sharply, driven by the need for high-speed networking, cloud data centers, to scale out AI services. Again, data centers are going to be just massive for this company. Huge, in fact. Probably huge. Record data center revenue. That's what we're talking about. Mellanox growth accelerated in the quarter. Contributed to 14 percentage points of revenue was just from the Mellanox acquisition. Pretty nice. Nvidia reported record revenue. That's right, record revenue for the second quarter. We love seeing that. Up 26% quarter over quarter as well. Now, EPS did actually see a rise, which is nice. It saw a growth from 90 cents to 99 cents this year, up 10%. You do like to see that. Now, it is down 33% from the previous quarter, but year over year is a really better comparison for me. And to see growth, we will take it. Non-GAAP EPS is up 76% year over year and 21% from the previous quarter. So, obviously, as we mentioned, they closed the acquisition of Mellanox Technologies, added to their revenue for sure. Very nice to see. So, despite the pandemic's impact on our professional visualization and automotive platforms, we are well positioned to grow as gaming, AI, cloud computing, and autonomous machines drive the next industrial revolution around the world. Again, they're in all of the industries that are really just massive. They're in all of them. Absolutely all of them. It will pay its next quarterly cash dividend of 16 cents. That's right, not much of a dividend on this company, around a 0.2% yield, really. On September 24th is when they're paying that for shareholders as of September 2nd. Nice to see it. We got a little yawny. Yanny. I heard Laurel personally, but net income line of $622 million there. We'll take that. That compares to $552 a year ago. Quarter over quarter again. Not the comparison we typically look for. As far as I'm concerned, at least. So, as far as some highlights, they mentioned data centers' massive growth and announced together with the world's leading server maker more than 50 Nvidia A100 powered systems to tackle the most complex challenges in AI, data sciences, and scientific computing. Nvidia is on the forefront, right? They powered 8 of the top 10 and 2/3 of the total systems on the latest top 500 list of world's fastest supercomputers. That's right, 2/3 of the total systems on the top 500 list. That is incredible. This includes the Nvidia Selene, which is the DGX Super BOD system, which ranks number 7 on the list and was number 2 on the Green 500 list. They set 16 AI performance records. Gotta love that. They made the Nvidia A100 Tensor Core GPU available on Google Cloud. They provided CUDA GPU acceleration for Apache Spark, the world's most popular data analytics application. You know, what can I say? Companies just on the forefront. They're on the forefront. And they unveiled the Nvidia Mellanox UFM Cyber AI platform, which minimizes downtime in supercomputing data centers by detecting security threats and operational issues. You love to see it. In gaming, obviously, good growth there. Ramped 100 plus new Geforce laptops to deliver outstanding performance to students, creators, and gamers. Rise up, gamers! They announced a range of games now supporting Nvidia RTX ray tracing. Incredible stuff here. If you've ever seen ray tracing, Nvidia ray tracing is just, it's a beautiful, the games look beautiful when you do this. Just incredible stuff there. Yeah, very just nice stuff. And new worlds for Minecraft. Obviously, Minecraft is one of the main ones that was the original. Like, here's this. This is just to show you how beautiful we can make even a game out of blocks. We can make it beautiful with our Nvidia ray tracing. And trust me, if you've ever seen videos, beautiful stuff. They expanded GeForce Now to Chromebooks, which is incredible stuff because Chromebooks, obviously, really the number one laptop used by schools right now, with everyone going back home home for schooling. This could be a benefit in that aspect as well. Very nice stuff. Very nice stuff. And professional visualizations, they launched with Acer, Dell, Lenovo, and Microsoft new mobile workstations for professional creators. They announced the Nvidia RTX has been implemented in the latest application releases of Foundry, Chaos Group, and Redshift by Maxon. And they released the Nvidia Quadro View Automotive. They announced with Mercedes-Benz that the car maker is integrating into every vehicle in its lineup beginning 2024 a new software-defined vehicle architecture that is perpetually upgradable and built on Nvidia Drive AV autonomous driving software. That's massive. Mercedes-Benz putting up just it's some good stuff. It's some good stuff here to see them have a partnership like that. There's no doubt. We do like to look, obviously, at the balance sheet as we do to get a good idea what all's going on. So, balance sheet wise, we take a look. We see total current assets. This gives me a 6-month comparison, obviously. 14.6 billion versus 13.6 billion. A lot of total current assets for this company. I can't lie to you. A lot of total current assets. Total assets in general of 25 billion versus 17.3 billion. Big improvement there, and you really see most of it is because of this goodwill category, as well as intangible assets grew as well. From liabilities, current liabilities of 2.4 billion versus 1.7, and liabilities in general jumped up quite a bit because of long-term debt that they've put up. So 11.2 billion versus 5.1 billion. So definitely an increase in liabilities there, but overall we did see assets grow by more. So total stockholder equity is up to 13.9 billion versus 12.2 billion 6 months ago. Definitely a big improvement there. This balance sheet has seen some good improvement, and I like it. The company's very well poised for long term. If you're willing to hold this stock long term, I still think it's a decent buy at these levels. But it just depends on how patient you are. But in my opinion, it's worth it.